Welcome to the Master Series, your guide to intelligent production, brought to you by Entertainment Partners. I'm your host, Natalie Nelson. In the Master Series, we focus on important issues impacting the entertainment industry and its workers through in-depth discussions with legal, tax, payroll, technology, and production experts. And today, our topic is payroll insights for budgeting success in 2024. And our experts will be giving an overview of legislative changes impacting production workers and production budgets and how to confidently navigate these changes in the year ahead. Two quick housekeeping items as we get started today. First, we encourage you to join the conversation by posting questions for the panel in the Q&A section of the Zoom call. You can do so by clicking the Q&A icon, and we'll give a few minutes after today's discussion to answer questions. Also, please take a few seconds to answer a short feedback survey after today's webinar. This includes the opportunity for you to give us feedback as well as suggest topics for future webinars. Your feedback is very important to us, and we thank you for it. Now I'm pleased to introduce you to today's panelists. Today we are joined by Davida Lara, Executive Vice President of Payroll here at Entertainment Partners. A nationally recognized thought leader with over 20 years of experience, Davida combines a high level of proficiency in business applications, process, and organizational management to lead Entertainment Partners' payroll services team. A frequent speaker at many key global forums, including ADP, KPMG, and PwC. She has recently appeared at the C3 Convention, Human Resources Association Forum, Association of Film Commissioners International Conference, and the Hollywood IT Society Summit. Prior to joining EP, Davida held positions as SVP and Head of Global Payroll for the Blackstone Group and Head of Global HRIS and Payroll for the Harman International Industries. Throughout her career, Lara has headed numerous diversity and inclusion initiatives and continues to be a voice for empowering women. She sits on the board of directors at the Rowan Center, a sexual assault resource agency, sits on the board of directors for Women in Film, and was the Global Payroll Titan Award winner in 2021. We are also very pleased to welcome Cheve Belcher, CEO of Lighthouse 729 Inc. Over her career, Cheve has held the esteemed roles of EVP of Production Finance and Head of Corporate Finance at Jesse Collins Entertainment, where she was instrumental in initiatives that enhanced the organization's long-term worth, fostering improvements in financial controllership, operations, and systems. Cheve's professional narrative also includes a tenure with BET Networks, a Viacom subsidiary, where she held the title of VP of Production Finance, as well as positions at Walt Disney, Universal Studios, Turner Broadcasting, Caltech, and the Pasadena housing community. Cheve has over 25 years of experience as a strategic financial advisor who has significantly contributed to the business expansion, operational strategy, and robust governance with realms of the production and corporate finance. An advocate for financial growth and accountability, she is also a dedicated mentor within the accounting and finance community. She holds a BBA in finance from Loyola Marymount University and intends to further augment her qualifications by pursuing an MBA in 2025. And finally, our guest moderator today is Becky Harshberger, Vice President and Practice Leader here at Entertainment Partners. Becky has over 23 years of experience as a certified payroll professional. She is Vice President of the American Payroll Association's Board of Directors, member of the APA National Speakers Bureau, and co-chair of the APA Government Affairs Subcommittee on Federal Issues. In 2020, she was awarded the APA Special Recognition Award for her contributions to the advancement of the payroll profession, and she was also named California Payroll Professional of the Year in 2014. Davida, Cheve, and Becky, it is a pleasure to be with you. Thank you for joining us for this wonderful conversation. It is our last webinar of 2023, and I know we have a lot to get to, so I'm going to pass things over to you, Becky.
Oh my goodness. Is it just me, or did this year seem to take forever? It just seemed really, really long. I cannot believe that 2024 is going to be here in 19 days.
I can't believe that we're past 2020. I think I got stuck after a while, but Christmas is also in 2 weeks. But, guys, look at it. The contracts are settled now. Everyone is ramping up their budgets for 2024. And we usually see a slowdown this time of year, but I think everybody's getting busy. I know we are.
Yeah.
Yes, it's been a busy time for me this last couple of weeks. I don't know where 2023 has went, so it's just been really hectic. So Becky, let's start with the federal payroll changes. What's new for 2024?
All right. First up, our favorite Social Security wage base. The wage base in 2024 is going up to 168,600. So if you have people that meet the wage base, you're going to have to budget the match of $10,453. So the wage base in
Mhm,
2023 was 16200,
mhm,
and we budgeted about 9,932. So it's an increase year over year between 2023 and 2024 of $521 if somebody makes more than 168,600 in 2024. So
mhm.
that's gonna hit our budgets.
Wow, that seems like a big jump.
You know, it does seem like a big jump because we only really talk about this once a year. But for those of you that listened in last year, the jump was over $1,000 between 2022 and 2023 for our budgets. So it's actually only half of what it was the year before.
And not to be a payroll geek here, because that's what I am. If anybody really wants to see the change, if you look at the changes over the years, this just keeps getting larger and larger and larger, right, Becky?
It's a bigger and bigger part of our payroll and our budgeting every year.
Yeah.
And there's legislation to increase it further. We'll see if Washington can pass anything, but I've seen some legislation that the wage base could go up to 400,000 if
Oh,
certain pieces of legislation pass.
oh, okay. Wow. So I really needed both of you guys in my tax accounting class because you are both tax whiz. Yeah. Any
Yeah.
change, any changes to Medicare?
No, Medicare is boring.
Okay.
It still remains at 1.45% with no wage base for employers. But for employees, anybody that earns over more than $200,000, we still have that extra 0.9%. It's not going to affect our budgets, but it does affect the phone call that you get from someone that earns that kind of money that says, "Hey, how come my Social Security went up?" When they hit 200,000. So just keep that in mind. And the other item that we always talk about when we're talking about federal is
Mhm,
federal unemployment. And federal
mhm.
unemployment for 2024 remains the same at a wage base of 7,000 and an effective tax rate of 0.6%. So that'd be $42 for every employee that earns a wage base of 7,000 in 2024.
Right. So that's for FUI, but some states are paying more, right, Becky, if I'm not mistaken?
Yeah, you're right. So any state that didn't repay the unemployment trust funds that they borrowed during the pandemic, if they had those states have not repaid the money, then those states employees will pay more, employers, excuse me, will pay more if they have an outstanding loan.
Wow. Okay. Didn't know that at all. That's interesting.
Yep.
Which states still have outstanding loans, Becky?
It's the usual suspects. It's the big states, California, of course, and New
Yes.
York. So heading into 2024, we are
Mhm.
projecting that California and New York will continue to default. In other words, they won't pay back the money they borrowed during the pandemic. And so the mechanism to pay that
Hmm.
money back is to default on the loan, and automatically the the amount that you pay in federal unemployment goes up for every year that you did not pay it back. It goes up by 0.3%. So in 2023, we saw what EP calls FUI 2, and FUI 2 was 0.6%. So in 2024, goes up by 0.3. And so for California and New York, FUI 2 is going to be 0.9% of that $7,000 wage base for employees based in California and employees based in New York.
Wow. Okay. I'm gonna have to write that down. I'll have to circle back later. That was a lot of math.
Yeah.
So in 2023, though, isn't the additional amount only 0.6%?
It is, and so it's exactly equal to the unemployment, the federal unemployment. So it's $42 in regular federal, and then $42 um, in FUI assessment, FUI 2 as we call it. And so in 2024, I got to use the right numbers. That additional amount goes from $42 to $63, and that's what you're going to be budgeting for. So the other quasi-state that is affected by this is the Virgin Islands. And the Virgin Islands, unfortunately, is still repaying the borrowing that they did during the Great Recession in 2010 and 2011. And so FUI 2 in the Virgin Islands for 2024 is going to be 4.2% of the 7,000. So my joke is that my one payroll tax geek joke is that the federal that Rhode Island, that Virgin Islands needs to be part of the student loan forgiveness program because they're never going to be able to pay it all back.
Absolutely not.
No. Okay, that's a long time. I do hope California has, a plan to pay off quickly, because a lot of my friends that have small businesses are thinking about moving out of the state, to other places for a host of reasons, but one of them being increased taxes. So, Davida, are there any other federal changes?
Oh yeah, the federal government won't be left out. They're going to get their changes in there too, for sure. So the federal mileage rate hasn't been announced yet, as far as I've seen so far,
Yeah.
but it may go up as high as 67 or 68 cents, which is beneficial. But as of now, it's still 65.5 cents. But as soon as the IRS announces that 2024 mileage rate list, we'll post it as we do. But if you provide a qualified transportation fringe, it's going from 300 to 315 a month for both parking pass and metro passes for those of you who use those. In addition, 401k deferrals are going up to $23,000, and the over 50 catch up is going to remain at $7,500. So as old people, yes, we'll be able to defer $30,500 in 2024. Again, a beneficial thing for employees.
Okay, well, that's good to know. I'm starting to see the perks of being, as you flipped your hair, in the 50s club.
Okay.
So, I'm going to go off script just a little bit, okay? So, what is FLSA overtime? Why does it happen? And why does it end up being one of the items that throws off my budget? And what's the difference between overtime and the California Labor Code and FLSA overtime? Because I
Break
get
it
a lot
down,
of
Davida.
overtime
Break it down,
questions.
Davida.
Yes, I know that was a lot, Davidas, but I know you can take it. You can handle it. So
I can, and I'll break it down as much as I can. With the caveat, there is a lot more to it that we will have posted, and Natalie and team will make sure that you guys have access to it. It is complicated, and it's one thing that we want to make sure the teams are as educated about, because it does have an impact to the budgets for sure. The biggest difference, though, for those of you that don't know what the Fair Labor Standards Act is and why it exists, I implore you to Google it or get Becky on the phone, because she does a good job of explaining it. But the biggest difference is the calculation in the work week and work day, and also the amount of money that's calculated in the overtime. So things like box rental and things will impact the California calculation for overtime, but may not impact federal. The one thing that people remember is how you actually calculate overtime as well, which is everywhere else but California, I believe is Alaska, right, Becky? And those good old Virgin Islands still calculate overtime in the per day, and the rest of the world, they do it in a week. So the short answer, the biggest difference is time and money, and knowing that difference by, looking at that table will make the biggest difference for your budget.
okay, who knew? Thank you for explaining it so clearly. Anything else on the federal front we should think about?
I just want to add something before we move on, because I do get a lot of questions about that FSLA overtime on paychecks. And interestingly enough, I was talking to a production accountant about 4 months ago, and we were talking about a different tax issue. And when we were wrapping up, she mentioned the fact that she had just finished a Department of Labor audit. And I don't hear about a lot of those when productions are audited by the Department of Labor. But this time I asked her, hey, how did it go? And she said, what was interesting was the auditor pointed out that we had that line item FLSA overtime, and they told me that's what they were looking for. Were we calculating overtime correctly? And they were surprised. The auditor was surprised to see that as a separate line item. And she felt kind of like after the auditor had seen that, there was
Mhm.
nothing more to do. And the audit wrapped up pretty much quickly right after that conversation. And she had a no change audit, which is always awesome. But I just thought it was an interesting anecdote because I know it tortures a lot of people in their budgets. It usually ends up being a very little amount of money, but in a budget, especially people that budget to the penny, it just, you know, it bugs them. What can we say? Yeah.
Mm, That's true. I mean, any audit takes a long time. So wrapping it up really quickly like that, she was
Yeah.
very fortunate. Because
Yeah.
I mean, I've been in audits and it's a lot to do. So good
Yeah,
for
it's like
them.
having a second job,
It really
it can be
is.
really brutal, and you're
It
always
really,
nervous, like, "Am I gonna say something or give them something that's gonna make it worse?"
that is so true. It's like, okay, hold on, let me talk to legal first.
Yeah,
Um,
exactly.
so Davida, are there any other federal changes we should know about?
Yeah, there's one other one, but I am going to jump on that audit conversation because this is where
Okay.
I get to explain to people why we're so tough on the
Okay.
compliance stuff. I mean, we focus on that because we understand what the end result will be. We're so strict around a lot of what we're doing and asking for because we understand when there's an audit or from the state, the Department of Labor, they are way more punitive than we will be, less flexible. So when we tell our clients to do things, it's because of that. So I wanted to make sure we pointed that out early because as painful as it is, Becky pointed out how painful it doesn't have to be if we do it right from the beginning. But there is another federal issue, and it's since E-Verify is a federal program. I think there's one new E-Verify state. In mid-2023, Florida began requiring E-Verify. So as a reminder, in this industry, E-Verify is required in Alabama, Arizona, I'm gonna go slow because you gotta be writing this down. Georgia, Louisiana, Mississippi, North Carolina, South Carolina, Tennessee, and Utah. And we also post that information as well. And for those of you who haven't seen the notice, you can now verify I-9 documents remotely, which is a big deal.
Mhm.
Yes, it is. Remotely is where it's at
Right?
for a
No
lot of people.
paper. Just
Exactly, exactly. So listen, as we wrap up 2023, do you have any tips to end the year on a great note and start January 2024 off clean and stress-free?
Oh yeah, and Becky will jump in there too. But the first thing is make sure we're getting all talent and crew signed up for myep.com. And through that, they'll be able to sign up to receive their W-2s. We should be checking to make sure social security numbers and addresses are correct. They also can view their pay stubs as I keep pushing us through the paperless world. So myep.com is definitely something that can help you administratively get you prepared for next year so you're not dealing with a lot of paperwork.
And on the flip
Yes.
side, we don't really talk about it a lot. Oh, sorry, Cheve, did you wanna add something?
No, no, I
Oh,
was just
okay.
in agreement. That's all.
Oh, okay, okay. So I was just gonna mention the flip side, complete flip side is these accounts payable vendor files. There are really common accounting errors that we see for vendor 1099 reporting. And the first one is missing or invalid company tax IDs, missing or invalid vendor tax information like the name or the TIN or the address, that just the information is just not in your AP for whatever reason.
Mhm.
Using expired tax codes on systems or in your accounting software. And last, if you set up a vendor with both a social security number and an employee ID number, FEIN, a federal employment ID number, that can cause reporting issues for you as well. So just some tips to help you through on the accounts payable side. And I think that wraps up our federal update.
I think so.
Okay, well, let's start the states with California. What are some budgeting considerations with, as you say, FUI 2 in 2024 at 0.9% of 7,000? Is the state unemployment insurance rate changing?
Nope, California, they are consistent. My whole career, it's the wage base in California has been 7,000. And in 2024, the wage base for SUI in California is going to be 7,000. It would
Okay.
take an act of state legislature to change that. And so that's why it's
Mhm.
just consistently at 7,000, even when we have huge amounts of money to repay to the federal government. No one wants to be that state senator that suggests we raise taxes even more, to your earlier comment, right? So
Right.
the rate, the the unemployment SUI rate in California also is going to stay the same at 6.2%.
Mhm.
So for those people that are thinking of leaving California, we're probably one of the cheapest state unemployment insurance tax states out there at a wage base of a mere 7,000 and a low rate of six, believe me, 6.2% is a very low rate considering some other states.
Yeah, but they find the legislation to get you on the employee side though, right? Because employees will pay more in state disability insurance, right?
Really?
SDI, yeah. In
Yeah.
2023, the SDI
Mm.
rate is going to be 0.9% in 2024. The new SDI rate is going to go up to 1.1%. And the state removed that wage base for employees, right, Becky?
Yep. Yep.
Yep. So you will now basically pay SDI on all your earnings. Also, loan outs that are not registered with California Secretary of State will continue to be taxed at 7%. So that's not changing. But yep, SDI is going up.
Yeah, and you make a really interesting comment because it's twofold this year. Usually what you see is just the wage base going up, but the tax rate
Mhm.
stays the same. So lower wage earners aren't affected. Those
Mhm.
the wage base in 2023 was around 160,000. So those people earning less than 160,000 year over year saw a state disability tax rate in California of 0.9%. That same employee now, first paycheck in January, they're going to notice that incremental change from a 0.9 to a 1.1%. And then on the flip side, the high wage earners, they're going to notice once they hit, yes, this year's wage based in 2023 of about 160,000, they're going to be calling production accountants, hey, EP did it wrong, or they'll call EP and say, how come you're continuing to take SDI? And even more interesting, because I have to live up to my tax nerd title, is those employees they earn, let's just call it 150,000 on one production, and then they go to a second production in the year and they earn 200,000 on
Right.
their personal tax return. If they've paid SDI twice,
Mhm.
they get it back because as a citizen of California, we only pay it once. So when they file their taxes in 2024, they're also going to be calling EP going, hey, I'm not getting any of that SDI back for you taking it twice, when I've got two W-2s, two different payroll service providers.
Mhm.
And we'll be like, yeah, no, because the wage base is gone and everybody who counted on getting that little extra back or big extra back, it's up to that would be about $1,500. They're not going to be getting it back on their as a credit on their tax return when they file in 2024. So they removed the wage base um, because they have increased the SDI benefits and the paid family leave benefits for California workers. Yeah.
Correct. And then people
Wow.
should rely on their accountants for tax advice because it does impact them differently personally.
Hmm.
But we
Hmm.
want to
Mhm.
let people know when their net pay will change. And this is one that will change the net pay for California.
Yeah. Yeah.
Okay, so no more Christmas gifts. It seems like we have to, watch spending. Okay, that's good to know. I'm going to talk to my tax accountant soon as I get off this call. All right. So for now, since we're talking about taxes still, California tax incentives doesn't require the loan out withholding because in California, the withholding tax requirement, when applicable, is an income tax law requirement, not an incentive requirement. Correct, Becky?
Correct.
Okay.
Basically, you have to withhold that loan out that's working in California at
Mhm.
7% if they're not registered with the California Secretary of State. It actually has nothing to do, that 7% has nothing to do with the film incentive, and it has
Okay.
nothing to do with uh, motion picture television and streaming.
Okay.
Work in California. It's for any vendor that comes into California and does not register with the Secretary of State. You have to withhold that 7%. Yeah.
That's right. And the other big states are New York and Georgia as well, Shabay.
Okay. So I had a friend who was asking the question about, hey, there was a Colorado loan out, and they actually didn't see the 7% taken out, when they were working in Colorado, but they saw the 7% taken out when they were in California. And I was telling them because they were working in the state of Colorado, then that's why the 7% wasn't taken out. Correct?
Correct. There's only two other states that require the withholding
Mhm.
uh, unrelated to the motion picture and television and streaming industry. And those other two states are South Carolina and North Carolina. All the other states, when you see loan out withholding, it's
Mhm.
related to receiving the film incentive in that state. Yeah,
Okay. All
Mm.
right.
yeah.
That's great to know. What are the changes for New York in 2024?
So New York, the wage base is going up to 12,500 in 2024, but we are projecting the rate to stay the same at 9.9% plus the interest assessment on the money that they borrowed that they haven't paid back yet. So the New York SUI rate that we'll be billing through to clients in 2024 is 10.08%. And the other
Mm,
thing that you'll see, which is not changing, is the Metropolitan Transit tax at 0.34% of gross wages. So
Mm.
those are the two budget areas for New York.
No surprise from New York. As a New Yorker, I'll say it. They'll find a way to get their money for sure. But we are not projecting any changes to Georgia. I don't think either. That wage base is going to remain the same at 9,000. And I think the rate is 8.1 still, right?
Right. And we usually see Georgia's rate come in right around early January, but New York usually doesn't release their true rates until
mhm.
about, late February, early March. Yeah.
Okay. So we hit the big states. What about the other states?
So far, it's been kind of interesting. We've seen taxable wage base increases in 14 states with
Mhm.
some kind of shocking surprises. Connecticut wage base in 2024 is going from 15,000 to 25,000. That's
Mhm.
a big jump for a state
That
and
is.
rarely seen. So for your friends that want to leave California, they may want to rethink it because states are getting wise, and just as Davida
Mm-hmm.
mentioned, New York's going to get their money one way or the other. The other thing that we've seen is that several states are starting to include surcharges on their state unemployment insurance tax rate.
Hmm.
And the reason for that is they're still recovering from all of their funds being drained out during the great pandemic. So their trust funds to pay unemployment claims, the balances are really low, and they're trying to build up that balance for future, ripples in the economy, let's call it. So if so I would say reach out to your EP account manager and get the latest rates and keep double checking as you're doing your budgets into 2024 to make sure we haven't seen a rate change since we're seeing so much activity this for 2024.
Okay. So let me ask you this question. So why doesn't EP just publish the new 2024 rates and make them available to download into our budgets?
Oh
Because
man,
it's
that is
not available to us.
that is a great question, and I absolutely love the idea. But the states, they are so inconsistent with releasing new rates and wage bases. In 2023, New York actually released their rate notices to us at the end of March. I mean, they were really naughty. Um, so So our fear is that, we can publish it and we can put caveats on it like this is a projected rate, and then somebody uses it to do their whole budget and forgets to come back to us and go, "Hey, did you get the final rate on that yet?" And then they're
Okay.
off and they're bitter. So for us, we really I like the idea of being able to just download it into your budget. I got to say that sounds kind of sexy. Um, so, so Davida and I will take that one back,
Okay.
because if there's a way for us to put like, you know, estimated, in such a way that it reminds, in big bold letters, this is just an
Well,
estimate, that could be a really cool thing. So I do like the idea, but I just don't trust the states. They just, like look at what Connecticut, 15 to 25,000. That's a
that's a big
big
swing.
jump. And
Mhm.
someone may look at that and say, that's a typo.
Right.
And they put it back to 15. They're like, oh, of course that's wrong.
What
No
is
state
it?
ever jumps 10,000. So, we can't, we have to think about, Davida, how we could make it, I hate to say it, but idiot proof.
Mm.
We did
No, I
something like
mean,
that.
that makes sense. I
Yeah.
understand, and thank you for taking it back. So now, Davida, for you, how about incentive states? What can a production do to have a great 2024?
Well, the first thing the production needs to do to have a great 2024 in incentive state is let us know you're going in that incentive state. And let us know
True.
before you go to the incentive state, because we have some easy solutions for a lot of our clients to make sure that they are actually going to get the incentive, or at least support them with the information that they need to qualify for the incentive. But much of that has to happen up front. And the most frustrating thing is after the fact, when you realize that you didn't get that information to us, or we have to chase it. I like to use Louisiana as the example, because even internally, my team gets all frustrated about that Louisiana L4, or the equivalent of the state W4 that we're requiring, but we're requiring it because Louisiana is requiring it. And if we don't get it and we don't take that 6%, it will put the client's incentive in jeopardy. So any best practice tip that I'll give people around the film credit is, one, making sure that we're informing EP and that you're receiving the information with the checklist of items that you need to make sure you're doing, and that you're publishing the right documentation like the L4 in Smart Hub, or getting it to your paymaster. It makes the biggest difference in your audit, trust.
And we have a similar solution for New Mexico.
Mhm.
If you're going to file for the film incentive in New Mexico, be sure to turn on archiving for New York. For New Mexico residency forms to your Smart Hub. And I want to make one other mention about New Mexico. We saw a change this year in those residency forms. Historically, the residency forms have not required Social Security numbers. And in 2024, the residency forms are requiring Social Security numbers. And so I'm a little bit wondering if New Mexico is going to, with all of the ability we have right now to look at data and use data to make things better, faster, stronger. And certainly, I bet New Mexico is going to be using that in compliance. I think they're probably going to take the New Mexico residency forms and compare them to a New Mexico personal income tax return, and whether that return was filed as a non-resident return or a resident return. So that's going to be an interesting change in New Mexico, asking for that Social Security number on a residency form. I suspect they're doing it because they want to take a look at data comparisons
Sure.
for the motion picture, television, and streaming industry.
Yeah, but not for nothing, Becky, you and I've seen it over the years
Mhm.
that they're always looking for that data point to connect the dots, whether it be
Right.
new hire reporting to chase down child support or whatever. They're using
Mhm.
something to connect. And Social Security number being the most familiar, it shouldn't surprise
Yeah.
people that they're going to require it where they haven't been. But for loan outs domiciled in New Mexico, there will be no withholding required, right? So just continue to check your edits. Also, the loan outs must register with New Mexico Secretary of State and the New Mexico Tax and Revenue Department. They are going to require electronic registration through a CRS system. I think we have to post that information, Becky, somewhere to let information know, people know how to do that, because it'll be for gross receipts tax, payroll withholding, and workers' comp fees. So reporting through that will be easiest for everybody, and we'll get out of the paper game again.
Wow. Okay, that was a lot. So having a checklist would be great so that we can go down the list. But yeah, it's important. Also, too, I wanted to add about the tax incentive from, doing them. It's really important to have a meeting up front, like you said, Davida, so that we're all on the same page. Always ask questions. There's no dumb question, right? And I do believe by having synchronized, and how it actually, integrates with smart start and smart time, all of that paperwork is actually automated in and is downloading into synchronize. So that's a good thing. So you don't have to scan and, upload payroll, because those are a lot of files and it saves you so much time and money on the back end. So that's really important. So I just wanted to mention that, since you brought up checklist and, what's important and the whys for tax incentives to have great tax incentives.
Right. And thanks for saying that, Chavez. I also think that, that there's a level of comfort and trust that we're utilizing the compliance and building our tools around that compliance. So when you're not using paper, you're more likely to be accurate in all of that, in your reporting and your backup documentation and your output. So thanks for saying that.
And we can save.
I'm sorry, Becky.
So Davida and I have both been involved when the client panic calls us and says, Louisiana is asking for the L4s. They're L4s and they're not in Smart Hub. What am I going to do? We didn't turn that on. And so just know out there in listener land that if you're thinking right now, I didn't turn it on for that production and now I'm screwed. You're not screwed. Just give a call to your account executive or into product support. And there's a way that we can go ahead and upload the L forms into Smart Hub for you, or the New Mexico residency forms. We can upload those as well if you forgot to turn it on. So there's always a way. You just have to keep that line of communication open.
Okay, that's great to know. Thank you for that tip. Okay, so we covered the United States. What about Canadian locations?
Yeah, you saw me typing a little bit ago. Someone in the Q&A was going, hey, are you guys going to do this for Canada? And the answer is no, we're not going to do it for Canada because we're going to cover Canada right now. So everybody budgeting for Canada, here are the numbers that you're going to need for 2024 Canadian fringes. The CPP will be 5.95% with a cap of $4,056.50. The EI will be 2.234% with a cap of $1,469.77. And for those of you that are filming in British Columbia, workers' compensation is going to be 1.91% with a cap of $2,228.97. And the health tax in BC is going to be 1.95% with no cap. And that wraps up Canada.
Okay.
Well, we can't just stop talking about Canada. Let's talk about the fact that, I've done payroll in many countries over the years and super excited to, announce that EP's expanded our global footprint beyond Canada as well. So UK, the EU, South Africa, Australia, and more. So definitely reach out to your EP client partner to learn about how processing these in-country payrolls for your foreign location and productions, how EP will be able to help. We also will continue to process payroll for our U.S. citizens that are working in foreign locations with the right tax advice. This is another example of where we have to make sure we're informing EP when we plan on shooting outside of the U.S. But because of our relationships abroad now, we can be a lot more supportive. And the last thing is that we have to make sure all U.S. loan outs working in a foreign location that has taxation are S corps. Extremely important, guys. Becky, anything else to add on that?
No, but well done. But I was just, while you were talking, I was double tasking and looking in the chat. And we do have a question for asking us to clarify the Fair Labor Standards Act overtime. And they were asking about the calculation. And that is such a great question because we do torture people with that calculation. And I know what they're thinking. They're thinking, if I can somehow know what that calculation is, I can just add a column to my budget and I won't be out of balance. So here's the tricky part with FSLA overtime and the requirements by the feds for this.
Mhm,
In the time frame of the paycheck, and let's just call it Monday through Friday, when
mhm,
overtime is earned and the only pay that they get is regular rate of pay,
Mhm.
then overtime is calculated at the regular rate of pay. If
mhm,
there's anything else taxable that's added in during that week, and the things that would be taxable in our industry would be things like taxable box rental because you didn't get the paperwork, or taxable mileage because
Mhm.
you paid more than the mileage. So it's anything that is a pay code that will add wages to that paycheck outside of our regular pay code 110. So you
mhm,
kind of think of it that way.
Correct.
So
mhm.
anything that adds into that wage calculation, we have to add that into the regular rate of pay and then calculate overtime. That's what FLSA overtime is. And Davida, did I hit it right?
You did. And just
Oh,
to go
good.
back to what I mentioned earlier, there is a table where we're actually spelling that out. That's
Mhm.
available in that client alert. So we should figure out how to get that
Yeah,
table posted for the participants, just the
yeah.
table, because the rest of it might not be relevant.
Yeah. Okay. Sounds good. Sounds good.
Okay.
Now, I'm just
Um,
gonna go ahead and keep talking. I'm gonna check our chat.
no, I just wanted to say that we covered a lot. Any final thoughts? I would say before Q&A, but we're doing Q&A right now. So anything, Davida, Becky, final thoughts?
Well, I'll say I'm excited about 2024. I'm glad the strike is over. I'm glad the people are getting back to work. And that we're staying educated about what's going to impact the teams. You know, the most important thing for us is making sure people are getting paid accurately on time. And this is the stuff. This is how we do it. I mean, it looks boring on its surface, but somehow we didn't make it boring. But making
Yeah.
sure we know this is going to be extremely important for 2024
Yeah.
in your budgets, and everybody will be happier when people are paid on time.
Yes.
And my last comment and wrap up is everything is fixable.
Mm.
We just got to
Okay.
talk about it. So
Yes.
it's some, it could be an embarrassing thing. It could be just I lost it on the pile around my desk because yes, I am a pile person too. And I've just found this. Can you fix this?
Mhm.
Everything is fixable if we know about it and we talk about it up front and we partner on it. So if there is an issue, your first reach out is to your paymaster, second reach out to your account manager, and if you really need to go that far, but mainly the paymaster is going to be able to help you. Just keep those lines of communication open. I think 2024 is just going to be insane, and so it's going to be really easy to lose sight of things, but when you find it, fix it so that year end 2024 is smooth, because I think we're in for a rocket ship in 2024.
That's right. And we'll promise to stay on top of their compliance stuff so they don't have to so
Yeah,
much, but definitely
yeah,
communication is key.
yeah,
All right. Well, for me, I have learned a lot. I've learned to lean on entertainment partners for my tax questions. Looking forward to having, for me, really just one area where, the accountants and production finance, especially, can just go to and get this information quickly because, we're thinking about there's so much that's going on, right? And so to stay in compliance, to do cost reports, to make sure budgeting is correct. It's fast paced. And so I really look forward to the technology helping to take care of the low level type of tasking so that we can make sure that we're on top of the compliance and understanding, not only United States, but the rest of the world when it comes to payroll, because payroll is huge and it's a big part of a budget. So it's very important that we do get it right and we actually understand payroll. We're not going to be experts. Some may, though. But the majority of us will, just want to make sure that we know the basics. So I really appreciate being here and learning a lot from you guys. So thank you.
Thank you. And Becky and I are always going to advocate being, you're going to learn from yourself. So if you're not looking at your own pay slips and checking your own addresses and making sure your W-2s, then you're not
Yes.
going to be able to do it for anyone else. So start there. Ask those questions of why your SDI went up. And when you understand it, then it'll be a lot easier to explain why it's going to impact the budget the way it is.
All right. Well, it looks like we're coming to the end of our time. So thank you, ladies, for all of the information that you have shared with us today. I do see a few last questions trickling in. So please know if we didn't get to your question during our discussion today, that we may be reaching out to you individually via email and sharing additional information. For everyone that asked, and even if you didn't, you can get a recording of today's webinar. We covered a lot of information and a lot of figures. So we will be sending out a recording via email to everyone who registered. But in addition, you can head over to ep.com/masterseries and catch the full library of our webinars. So this is everything from legislative news, industry and product news, incentives news, financing, payroll, whatever you may be looking for, you will find it on our master series. So we encourage you to check out that library. We also want to promote that the EP blog is a great way to stay up to date on the latest entertainment and production news. Thought leaders like Becky and Davida and others from Entertainment Partners, as well as our partners in the industry, contribute to our articles we publish every week. And there's a lot of great information there as well. So if you're looking for some of those numbers, some of those formulas, some of those statistics, it's all in writing and it's all on the blog. We thank you all again for joining us for today's Master Series and for staying up to date on the legislative trends and news that is going to impact next year. Thank you to our lovely panelists for joining us, and we hope to see you all again in the new year.